Disclaimer: the views expressed by the host of Insider Exchange do not necessarily represent those of our clients, sponsors, partners, or guests and should not be considered investment advice in any way. Similarly, the views and opinions of our guests and clients do not necessarily reflect those of our hosts or on our platform. Nothing shared on this platform should be read as constituting investment advice of any kind on the part of Insider Exchange. Any of its hosts, guests, partners, or sponsors trading and investing carry varying levels of risk and may not be suitable for all investors. Please ensure you fully understand the risk and take appropriate care to manage your risk. We strongly advise that you obtain independent financial, legal, and tax advice from regulated professionals and institutions before proceeding with investing decisions. Can I go and play now?
Hello and welcome to Insider Exchange, the show that is still unsnacked and still aims to bring you the very best in news and markets and companies. We're 6 for 6, huh? Well, not us, but Trevor Noah went 6 for 6 overnight at the Grammys as host, 6 years in a row as the host of the Grammys. That's a kind of like annuity gig I would like to get, hey?
Well, good thing, because Trump wants to sue him for saying that he went to Epstein Island.
Ooh. Also, this is the last time he is doing the
Apparently.
Grammys hosting. So, Grammy committee, hey, cheaper version. Anyway, on the show today, we're going to be taking a look at some very interesting things, useful updates as we always do. In our deep dive, we're going to be diving into what happened last week. We're going to try and make sense of the market crash on the commodities front, the gold and silver markets, and all markets in general. I think the total amount of market share or market cap rather that was shed last week was north of $13 trillion. We're going to try and make sense of that and dive into that, and we're also going to try and make sense of some very interesting numbers in our Make It Make Sense. Let's kick things off. Let's get the show on the road.
Unfiltered. 98 are currently collapsing.
Privilege of welcoming one of our good friends into studio.
So not even Buffett listens to Buffett. Sue me, China, if you must. But
1 or 22 on AC, but you're not getting that at home.
And there's quite a bit to discuss.
the stock is cheap.
The last podcast I did.
Introduce me.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
We're going to get straight into our useful updates because we never have time for them, as you know.
The clock is coming.
The clock's already started. Oh, Ghost Producer doesn't care about us. Earnings update, first update. We're starting to get these numbers come through and we're starting to see some surprises. The likes of Microsoft and Tesla missing estimates by a lot.
So Tesla doesn't surprise me. Then they're shutting down and they're going to build robots and sell a lot of those, except they don't have one. Microsoft, it's the transition, right? Microsoft used to be a software company, which means your margin was what? 90% or something, and now they're spending. And that spend is a fundamentally different place. It means that suddenly they've got a lot more asset, so they're not this light balance sheet type business, a lot more capex going in, you get different returns on that. You know, you rent Office, you rent it once, you sell it a million times, it's all just like profit from here until the clouds. But if you remember last time, so a quarter ago, it was the other way around, where everyone hated the Meta and loved the Microsoft. Swings and roundabouts.
It's so weird. Earnings, especially, and perhaps that's what we'll get into in the deep dive as well, is trying to make sense of markets because valuations don't make sense. The crashes themselves don't make sense. And that's why the deep dive is what it is. But that's the update on that. The next update is interest rate decisions. Hold on the part of the Fed, hold on the part of the SARB. No surprises there.
Well, Fed, yes. SARB, I don't know. I mean, I got to say, the governor was more upbeat than I think I've heard him in a long time. I mean, no, and he said things like, hey, the risks are to the good side. Usually the risks are to the bad side. I mean, all sorts of stuff. But that 3.6% for December was a worry, or the 3.2% for the year. But have you ever heard of the annual inflation? Like, no one's mentioned that before until it's at 20-year lows.
Yeah.
It's like...
And the other thing is, so for me, the reason I'm not too surprised by the hold is, one, the US held before,
sure.
which we're not going to get into that interest rate differential in this conversation because we don't have time. But more importantly, we still have a budget speech to be delivered. And I think that's going to set the tone for the year. So let that happen and then
point.
we'll
Get
get
the
into
budget
it.
out the way.
Yes,
Fair enough.
That's the reason for that. New Fed chairs, the next update. The President of the United States has nominated or put forward the name of Kevin Warsh as his preferred candidate. This is a gentleman who was part of the Bush administration and served as a Fed governor Fed governor in the past. You would think that this is good. I mean, he's been dubbed as King Dollar in the past. He's very pro-dollar, but if you remember correctly, he was also a lot more dovish than Jerome Powell.
So everyone was like the Oak's a hawk. I don't care what he's done in the past. The first question the president asked him when they had their cup of tea was, will you cut rates? And the answer was either yes, you can stay, or no, leave the tea and go out the door. Like this Oak has made the promise. Now, and he also wants to rejig make changes to the Federal Reserve and all that sort of stuff, etc., and fix the balance sheet, etc. The idea that he's going to go out there and raise rates, not happening.
Very interesting nomination, nonetheless. I think I said dovish instead of hawkish.
Yeah,
Sorry,
everyone says
right.
he's hawkish, but he's not going to be hawkish.
Yeah, we'll see how that goes. Speaking of the Fed did a rate check, which is something they don't do very often.
What's a rate check?
So they look around and they look at how they can manage the economy, how they can deal with things without having to raise interest rates. And what this rate check typically prompts is the printing of new dollars and potentially the sale of new dollars, which would further weaken the dollar. But the interesting theory that's emerging there is that it's to buy Japanese yen. Now, I can understand that in part, primarily because of how much debt the Japanese own of the United States. But I don't see why America would want to bail Japan out of their own fiscal issues and situations, even if it means weakening the dollar. It doesn't make sense.
And hang on, this is the American Central Bank moving away from the US dollar like every other central bank. No,
not going to happen.
None of this made sense.
There we go. We're going to take a break because we have time for that. We don't have snacks, as we said, so please don't send help, send snacks. And we're back from a snackless snack break. We're continuing with our useful updates. We're running out of time. The stock market, the Saudi Arabian stock market goes live this week. We said it was going live to the public in February. This is the first trading day of
yesterday.
February.
No, yesterday. They trade Sundays, remember?
Yes. So, anything interesting pop up there?
No. You know what, Mountain Time? If they start trading gold and stuff, we can get in a day earlier look. But you know what? I'd rather not. I like my Sundays as they are right now.
That's quite interesting. The next update is the gold. Gold price tapping $5,600. A finance last week.
Bearing the lead there, but carry on with your story.
$5,600 a finance last week. This morning, 4,400 lows were tapped.
Otherwise known as 2 weeks ago. So what happened with gold? This time last week, it was breaking 5,000 and whoa, exciting and everything. And then it gets to 5,600 and the world is wonderful. And then it collapses in a heap and basically gives up 10 days. When stuff go vertical, it's called gravity. Last week, what did we have? We had aluminium. Interestingly, America, not Europe and Asia, hitting records. We had copper, we had platinum, we had silver, we had gold. We just had everything. Half of these markets are so illiquid that just you and I could move it. And it went crazy. And you know what? Look, it does leave us with a very, very ugly weekly, monthly candle. It's going lower. How much lower? I don't know. But I don't think this is... I mean, the theme for gold hasn't suddenly changed.
So this is the thing, and this is why our deep dive is centered around what's happening in the markets at the moment, is, as you rightly mentioned, if something goes vertical, gravity at some point will have to take an impact. But something else that has gone vertical over the last couple of years has been stock markets, and they haven't taken the dip that we thought. So we'll get into that, I suppose, in the deep dive, because we only have 2 minutes left to get into the rest of our useful updates. Canal Plus looking to potentially bring their streaming app into South Africa so that they can bring facilities like Apple TV, HBO, and other things into the South African market. Now, if that is the case, why did you buy MultiChoice?
They bought MultiChoice because
for the African business, other than that.
Aside from one African country, Canal Plus now owns everything in Africa because it was Francophone, Anglophone. I'm curious because the MultiChoice app was about the third worst app that the world had ever seen, and this means that we're going to get a better app.
Well, we hope we're going to get a better app. Remember, we were promised a better Showmax, a Showmax 2.0, and that failed to deliver and failed to meet expectations. So we'll see. We'll see how the Canal Plus streaming app works out and what it means. We're going to see if we can wrap things up with the final update. Quite an interesting one. Not market specific, but does involve a company listed in Germany, and that is Mercedes-Benz. They celebrated 140 years. And I found it quite interesting because... Wow. The people that celebrated 140 years with them were arch rivals, BMW and Porsche. Two very different things, right? And we'll put them up on our socials. Two very different ways to celebrate. BMW almost saying thank you to Carl Benz for creating the automobile. It allowed us to create sheer driving pleasure. Almost cheeky, very tongue-in-cheek.
Bus meet Mercedes, okay.
And then Porsche puts out a very old black and white photo with... I think it was the first vehicle that Ferdinand Porsche was involved in from a design perspective that was then a winner in one of the races. We'll put up the video, the pictures online and stuff. They took a sentimental route saying, look, from founders to where we are and all of that.
Okay.
Oh, wow! It scares me. That's the update.
So for the record, 100 years, not 140.
Really?
Yeah.
I thought it was 140. We're out of time. We survived. That is a shocker. We're not ready. That's useful updates, folks. We're going to get into our deep dive. We're going to see if we can make sense of the market moves, as erratic and volatile as they may be. And then, of course, stick around for Make It Make Sense later in the show.
No, you're all right. 140.
Oh.
So the merger was 100. Was 100.
Oh, the merger would have been what? Daimler and Mercedes.
I don't know. Mercedes and Benz, I guess.
And we're moving on to our deep dive. We are diving into the events of last week. We're going to be trying to make sense of the market movements, the market volatility, and the extremeness with which markets have been correcting. Hopefully we can get to the bottom of this. I think this is a conversation that would definitely require a lot more time, and that's why we decided to do it as a deep dive rather than as part of our Make It Make Sense segment. It is fundamentally important to be able to understand why some of these moves occur, especially if you are looking to be a market participant. Again, folks, this and all our conversations, as per our disclaimer, are not and will not be financial advice. Please do not come back and say that we've given you financial advice, because you've got the wrong show then. Last week, I tipped $5,000 on the gold price. It happened on the Monday. Then we ran hard to 5.6. Now, people say, oh, no, I mean, it's not that much or whatever, but 600 pips in less than 48 hours.
And gold is the single biggest asset class in the world. I mean, you know, like...
To run that hot, it almost looked like... We were unstoppable. It looked like this was going to be the run up to 6,000, 7,000 or whatever. But
32 trillion. Second is Nvidia at 5.
There we go. For context, right? And we thought, okay, cool. 5.5, 5.6. This we've got momentum, right? And then the unthinkable happened, I suppose, and markets just went the other way. And it was almost as though the only thing that I can think of that looked anything like what we saw last week on the gold price, particularly on Thursday, Friday, is a meme coin pump and dump. You know, when the meme coins run hard and you're getting in and the meme coin looks vertical, and then the dump happens, and then exactly as you say, gravity takes over. And I don't think it was something I ever thought I would see on the gold market. I've seen retracements, and we've seen deep retracements. But this kind of turn was almost as though someone was just yanking liquidity right out of that market. And then it obviously affected all the other precious metals, commodities, and everything else.
So I think well spotted. And a couple of things. So the World Gold Council report came out last week as well for 2025. And after being net sellers of 2 tons in 2024, ETFs came back to the party last year, 800 tons. So suddenly, and in fact, central banks dropped to around 800 tons after being 1,000 or so for the last 3 years. So there's a lot of weaker hands. In other words, because central banks aren't in the market selling and buying. They just sort of
it's buy and hold and boost reserves.
So please send us a ton and we'll, et cetera, et cetera. So maybe some weak hands, but also, and then there starts to just get some panic. Now, some of it is silver's just a low liquid market, copper's a low liquid market, gold not. But I think it really was just a case of it ran like absolute crazy. And then at some point, you got to start saying, this looks absolutely absurd. Now, I'm in no hurry to sell my gold. Still haven't. Quite happy with my holding. There's less of it, but that's fine. But a lot of folks were like, you know what? Like, we bought this thing expecting it to maybe go to 4,000, and here it is approaching 6. Let's take some money, and then it just, a little bit, and then the cascade. But as we said earlier, I mean, it goes vertical. At some point, it turns, and it needs 10% for gold in a week is more than 10% is madness.
It is. So what this prompted something, as you're saying this, I had the exact same thought yesterday around oh, but surely if it's run this hot, there must be some cooling. And then I asked myself, but why didn't we then see a cooling in equity markets, right? And
Sure.
I did a bit of diving into that and just thinking about how things are fundamentally different. And yes, equity markets are not deleveraging at the rate at which the gold price might be. And there are different factors that drive these different markets. I mean, gold for many reasons is the safe haven play, but also in light of the current administration of the United States, it is the best alternative to the dollar is what we're seeing come out, right? And I then asked the question to say, okay, but if things go vertical and they come down this sharply, why have equity markets not come down that sharply, right? And then I started to look into things like valuations, things like projections and forecasts from a company perspective. We've been getting these out of US stocks. US stocks, granted, they do hold quite deep balance sheets. But as you rightly mentioned, Sai, the gold market is not a small market. It's a $32 trillion market. So,
And it's up 13% year to date.
you see,
2nd of February.
so my question then became, what are some of the differences that we can start to draw on between what's happening in the gold and commodity space and perhaps what's happening in other markets and how that's starting to shape perhaps where we're starting to see risk and volatility? Because the same way the gold price has done the dip, it could quite easily by the end of this week be right back up at 5,500 purely based on how liquid that market is, right?
Yeah.
We won't
Yeah,
necessarily see the same moves on the equities front in the same manner of aggressiveness and strength, right? So my thought process or my questioning then becomes, okay, if we are in that space, how do we then start to define valuations and how do we then start to measure risk and volatility in the market?
That's a fair point. And we do see, and I'm thinking, I mean, Palantir did it to a degree. We do see absolute, not rug pulls, but collapses in prices. And that's not completely uncommon when there's not much underpinning it. Palantir traded, almost 210, is now down at sub 150. But the markets, equity markets are always fundamentally different to gold. To me, the biggest point is that equity markets in an ideal situation pay you to hold them, i.e. dividends. Not all stocks, I appreciate that, and dividends are at the whim of the board and the profitability, whereas gold is a flip, it charges you to hold it. There's a cost, you got to store it somewhere. You hold the GOD ETF in either Joburg or New York, you are paying a fee for that gold to be stored somewhere. But I also think equity markets, and we do see them do 10% at a time and stuff, but when you say equity markets, we're talking a universe of 10,000 stocks. When you say gold, it's just gold. It's just that one entity. So when I'm in the equity market and Palantir goes from 60 to 200 in 3 months, I might be sitting, I might be in equities, but I'm not part of that party. Whereas if I'm in the gold market, you're
everywhere.
We're holding the same thing.
So the interesting thing about that was I then also did I took it a step further and I was like, okay, let's zoom in on the Mag 7, right? Because they, for all intents and purposes, have held up the entire US economy. Let's be clear, by returns alone on the S&P, they accounted for more than 40% of those returns at one stage.
Yeah.
So it's safe to say they held a significant portion of influence in the market. I then said, okay, if we're looking at those companies and we're looking at the AI play, why then is it that from an AI perspective, the AI bubble hasn't behaved like a normal bubble, right? So I asked the question in the context of the fact that if you think about key points in history, right? The 1800s, the formation of rail, that industrialization process brought about a new era. The cloud thing that we went through between, I suppose, 2011, 2015-ish, around post 2010, the cloud infrastructure that brought about a new level of industrialization. And one could argue that from an AI perspective, this is a new form of industrialization. Sure. And if we are to follow that argument, then what history shows us is that at times of industrialization, the market doesn't acknowledge or doesn't put as much emphasis and pressure on returns, which comes back to a certain question you and I had. And we asked the question of all of this AI spend, how is it justified if the revenues aren't coming in? And that answers that question to say the market is saying if we're creating and forming a new industry, revenues will come later. They might not come now. And that would also support the rationale as to why AI stocks and the AI bubble isn't bursting as people think it is.
100%. And we've seen, I mean, to your point, and I mean, OpenAI is starting to do ads, although just a year and a half ago, Sam Altman was saying he would be very uncomfortable and very unhappy to see ads in ChatGPT, but ultimately they need some revenue. And it is that whole, but also that of those sort of hyperscalers, the Metas, the Microsofts, etc., they're not making money from AI, but to be clear, they're making money.
And they're spending.
Meta. I mean, how much did Meta do on their reality labs, their metaverse thing? And they ended up with nothing. And Zuck spent 50 billion or something.
Did, yeah.
It's just like, I mean, he's got 2 printing presses in his backyard, Facebook and Instagram.
And that was the thing, right? So for me, that's why I went into the Mag 7 and I asked the question around the hyperscalers to say, how then do you justify being able to continuously spend 50 billion, 30 billion, 40 billion? Because all of this spend, especially the spend that the tech guys are putting into buying things like chips, is the reason someone like NVIDIA has the market cap that they do, right? Because of the demand that sits within their book and their order book. Sorry, and then the question then comes up around, but then at what point does this go from betting on the future and investing in hyperscalers and investing in a new industry effectively to just pure gambling and just pure betting?
Oh, I would say part of it is that already. I mean, I would say we're already in part there, absolutely.
Yeah, because the rationale is I don't want to miss out.
Correct.
But
it's the absolute FOMO trade. So I think we're already seeing that to a degree. But it is around the betting on the future. And we have to remember that a lot of the railway companies and tech stocks in the .com that were the future weren't. I mean, Cisco's only just in the last year got past its .com highs, 25 years later. So a lot of what we thought were going to be simply weren't. Now, here it's different because, you know, if all of those Mag 7 have to take their AI investment and write it down to zero and generate no revenue from it, it's going to hurt. But that's not an existential crisis for them. They still are massively profitable companies. To be clear, NVIDIA, the exception there, but that would absolutely hurt them. But, you know, Microsoft, Amazon, Meta, they've all got other businesses. TSMC and ASML and NVIDIA would be the shovel suppliers you suddenly wouldn't be able to sell a shovel. But the rest are just going to be, we've got other businesses. And I think that's a very different story from previous. And if you look at previous hubs, and I'm thinking back to the marijuana hype of, was it 2 or so years ago? I mean, I remember Petri, Petri, once bought the wrong stock. So it was the same code, but he bought the one listed in California, which had nothing to do with marijuana, as opposed to the one in America, which was a marijuana company. He still made money because he wasn't the only person who bought the wrong stock. But those stocks all came fluttering back to earth, or crashing, or pick your phrase.
Side note, that reminds me of something. Did you know that in I believe it's the Austrian airport?
Yes.
There is a desk in Austria, a service desk for people that have accidentally bought a flight to Austria instead of Australia.
Yes.
So that Petri example.
Dyslexic me could totes do that.
Although, you know what? If I'm honest, if I ended up in Austria instead of Australia, I don't know if I'd be that upset considering the things that can kill you in Australia.
No. The question is, why were you going to die anyway?
Exactly.
And then we bring back to the gold trade. And there was a moment on Friday when Trump announced Wash as his, and I'm assuming that's
preferred candidate.
As his preferred candidate, which speak to everyone. The prediction markets had him as only second on the list, etc. And he was, and everyone was like, whoa, he's hawkish. Did you see what the dollar did? I mean, the dollar turned on a dime and went racing the other way. And it was, suddenly there was a sense that, hang on, this whole debasement trade, for want of a phrase, is not happening. Now, it is. But there was that sudden panic, and it's still out there. And I think it's slowly people are starting to realize, and it's what we said in the other segment, which is there's no ways Trump appointed someone who's raising rates. It's just not happening. It was
although, Si, let's look at this man's history.
Which man?
Orange Mussolini. He's always directed things in pursuit of his own goals, not in pursuit of American goals, not in pursuit of anything else. He might stand up and say it is for the purposes of making America great again and get all of MAGA behind him with that.
Yeah.
But if we look at the numbers, and the numbers are quite important here, right? In his return to office, if you compare Donald Trump over several years, right, between his first administration and currently, at the time of his first election as president, he was in debt north of $2 billion from a net worth perspective. As of the start of this year, his personal net worth is north of $5 billion US dollars, of which I believe 2 to 3 of that was acquired over the last year.
Yeah, and mostly from crypto misadventures, that rug pull on the Melania and Trump coin.
But the point is, think about how hard it is for companies or individuals to increase their net worth by 100 million or a billion in ZAR terms. Now think about that in dollar terms. For context, folks out there, the previous estimates, I think around 2024, end of 2024, perhaps-ish, around thereabouts, the entire net worth of South African businessman Malume Patrice Motsepe was rumored to be around the $3.5 billion mark. Right? That is over a lifetime of work. That amount is how much Donald added to his net worth in a single year.
Yeah.
So we can debate whether or not he's doing this presidency for MAGA or for his own pocket. That's a conversation we can come back to. But if we're to follow that logic, and I went horribly off track with this, but if we're to follow that logic, then it's a pump and dump, right? You weaken the dollar, right? You play out the sell-off trade on the dollar and all of that. You buy in, and then you reverse it and you say, we're going back into dollar. Because you've got the power to do that. That's the one currency in the world you can control as the president of the United States.
I mean, the whole thing is completely loopy and out to lunch and quite possible.
What of this presidency hasn't been?
Exactly. No, I hear you. I don't disagree with you in the least. I mean, maybe it was just the most epic rug pull of all time.
Parting thought as we wrap up kind of the deep dive into where we go to from a market's perspective, right, is we spoke about at what point does it become gambling, and some of it already is, and all of that. If institutions at the moment are uncertain as they are, and you're seeing the uncertainty play out in the markets, if institutions were certain, we wouldn't have this much volatility. We would have a lot more stability in the markets and how they're moving. This is clear evidence that there is some form of uncertainty, and it's driving volatility. What point does confidence end for institutions? Because a lot of these decisions are made based on confidence factors and confidence levels.
Correct. You
measure risk, you ascertain how much of this risk you're comfortable taking on, and then you apply a degree of confidence to say, with what level of confidence do we think this scenario is going to play out? And that's what you make your trades based on.
That's how business works.
Right? Now, at what point does confidence start to blur the lines with what is reality in the real market? And unfortunately, retail traders at this point, it's a sit on the sidelines and watch what happens, because realistically, the confidence question is not coming from there. It's coming at the highest level, right? Institutional traders, asset managers, everybody's sitting there and everybody's trying to have or put forward a confident face, a confident pose, almost like a fake it till you make it kind of scenario, right? We're trying to justify the numbers. Oh no, this sector's doing well because look at those numbers. This sector will survive because... At what point does that stop? And we start to say, do you know what? We don't know what's going on. Nobody knows what's going on.
I mean, I don't know, because when it does, it gets ugly quick, right?
Like it did last week. Like you lose 13 trillion in market value across a couple of hours.
And to the question, I mean, where does it go? I mean, that money, it went to the dollar, but it didn't go into treasuries, because treasuries, the yield went up.
But perhaps that brought up you've just brought up something else that I thought about that I wanted to ask you, Sai, is all of these numbers, valuations, estimates, everything's based on what people are seeing and saying that that's what fundamental valuations are worth, right? Where did that liquidity come from? Because coming out of the pandemic, that's what built up this liquidity. Where did that sudden injection of liquidity come from? Because it did not come from the governments. The stimulus packages, we can argue, had a limitation. Suddenly, this market has more liquidity than we've had pre-pandemic. Coming out of the pandemic, in the last 5 years, we've had so much liquidity.
I mean, I don't know.
Who's creating it?
So where has it come from? Because here's the thing, to your point. We don't have low rates. We don't have markets being flooded. I don't know.
The bond yields are still there. They're still stable. There isn't we can't sit back and say, oh, we've completely drained this market. Therefore, all of the liquidity that was in this market is now in this market. Same with the Bitcoin price. We suddenly go from, 10,000 to 120,000? Who's printing the new money, Si? That's going to be a deep dive for another day because we've run out of time for this deep dive. If you have thoughts, we'd love to hear the thoughts on that. We're going to get into our Make It Make Sense and try and make sense of some really remarkable numbers. Stick around for that. And we're wrapping things up this week with our Make It Make Sense. We try and make sense of some developments, and hopefully we can. Sometimes we can't. More often than not, we're unable to. But that's because
I'm feeling strong this morning.
Oh, yes. I like it. I like the enthusiasm. Okay, let's start you off lightly. It comes back to a conversation we had. We did an entire deep dive on this, folks. You can go find it. We did a deep dive where we tried to find Simon a beautiful sports car for less than 1.5 million rand. News update, there is a Citi Golf on sale for R1 million.
Is it one of those 1980s ones?
It is.
It's the multicolor. Remember the one that had the blue and the red and the yellow and the white and the green? $1 million.
Okay.
Look, it's got no aircon, it's got no ABS, it's got no comfortable nothing, but that thing's an icon.
To be fair, right? And I'll show you a picture of it. But to answer the question, I don't think it is one of the 1980s models. It is the 1.8 IR. It only has 55 Ks on it.
Oh,
it's basically new. It was registered in 2010. It was advertised at 999,900. So fairly recent, but it was one of those limited edition ones. Looks absolutely like it's never been sat in, basically. Would you buy it?
No.
Because a Ferrari is better value, right?
Because that thing is so... If you're going to be uncomfortable, be in a Ferrari. Man, this thing is...
If you're going to pay R1 million for comfort, let it be something else.
And this is a 2010.
Yeah.
No, man, no. No, you want the... No.
But it's the South African thing, right? So there are certain models, right? The BMW 333. You speak to any BMW fanatic about that, they'll tell you the history and the legacy behind that, to the extent that BMW is looking to remake that vehicle in South Africa. There are iconic models and vehicles that have, particularly in the South African market, had that kind of appeal and that kind of impact.
I love this car. The red and white ones, hey? I never owned one. I mean, I never owned a car in the 80s anyway.
Neither did I, to be fair.
Yeah.
I wasn't alive in the 80s, but I didn't own a car either.
Sure. Yeah, no, I mean, these things are awesome.
Would you pay $1 million for that?
No.
No, still no.
Again, if I'm going to be uncomfortable, make it fancy at least.
Okay, well, that answers that question.
I'm so happy that somebody else does.
Somebody else will do it. Yeah, that answers that question. The next useful update, the next thing we're trying to make sense of is 115 million is estimates at this point. Cape Town.
Oh,
they're not selling air. They're not selling air. They're building a wall. Much like Donald Trump's wall, but for different reasons. So, the Cape Town government has gotten approval to build a wall.
Oh, fuck, I heard about this on the freeway.
Yes, on the highway. Conveniently located.
$150 million.
Yeah, so apparently it is near some hijacking hotspots, I'm guessing, or some dangerous areas or whatever. There's been various conversations around that, because if you look at where the wall would run, people are saying you're just trying to hide the poverty because it runs as you come out of the Cape Town airport.
Yeah, I mean, this is not a debate. That is a given. Carry on with your true statement.
It's a wall. It's going to cost us more than 100 million rand. We're not Donald Trump. We can't have Mexican people build it for us.
Citi Golfs, stick them there. It would look prettier. It would be safer. Cape Town has lost its little nitpicking mind. They're going to build a wall.
They're going to build a wall
to solve their problem of poverty and crime.
They're going to build a wall.
Where's this worked?
Well, Donald Trump built the wall, so...
Where's this worked?
I don't know.
100 million.
China, maybe. The Great Wall of China. It's still there. Technically still standing.
And China hasn't been beaten.
There we go.
Okay, don't make
Don't make valid points.
Imagine what you could do with 150 million.
Of course.
In terms of poverty in the Cape Flats.
That's the question.
And solving...
Could the money be better spent?
It's better spent buying 100 Golfs. The answer to that is yes.
And even then you don't want the Golfs.
And then you've got 50 million left over to solve the poverty and crime. Really, they're going to build a wall.
There we go. They're going to build a wall. All right. The last useful update that we're going to get into is a gentleman you might not know, Si. I don't know how up to date you are in pop culture. There's a gentleman. I believe I'm hoping I get the correct pronunciation of his name. Khaby Lame, the quiet TikToker. The gentleman who goes...
Never met him.
You've never met him?
Never.
Well, you've never met him, but surely you've seen him online.
I don't think so.
Okay, so backstory to this gentleman. Got famous for merely pointing out the obvious. And was a social media sensation, basically got us through TikTok during the pandemic. Like 2020, 2021, when the pandemic was rough and people were being depressed about things, he was the humor that people needed, right? So nonetheless, built up quite the brand for himself. And recently sold said brand to the tune of $975 million. I knew that number would get you. Just shy of $1 billion. Right. Forbes officially does not classify him as a billionaire in their books because the company that he sold his business to, or his entire imaging to, that company had been in existence for less than a year and kind of looks a bit shady in some respects.
Like that man who paid $69 million for the NFT, but the whole thing was dodge. Okay.
So this is a little different in the sense that it is this man's entire business portfolio that he's built up in the social space, right? Mm-hmm. And the interesting thing about it is there was some digging that was done by... We don't know this person, right? They've got an X handle, and the X handle is Kwebbelkop, right? I say Kop because that's what we'd say in South Africa. Mm-hmm. But nonetheless, summary of that. The business that bought Khaby's rights was a business known for printing financial documents that had a revenue of less than $6 million that went on to IPO, right? IPO'd at a valuation of about $50 million. Following the deal, the Khaby Lame deal being announced, their valuation goes from $50 million to $16.3 billion in 6 months, right?
Okay.
And they were known for just printing financial documents in the past. So the question then quite easily circulates, and it comes back to our deep dive around valuations and justifications. And at what point, I mean, nothing against Khaby and the brand he built for himself and all of those factors. He did well for himself there. If anyone offered me and offered us 975 million rand or dollars to sell Insider, we would do it. We can,
in a second.
You know what? And maybe that means that we are easily susceptible to money, but a billion rand is a lot of money, folks.
He's
but
had
the point
2.6 billion views on YouTube.
So he's done. So I mean, and in all of those views, we still don't know really what he sounds like because they've all been silent.
I like him.
Much like Mr. Bean, right?
I like him, and he did some clever deal with his thing.
$900 million. The company that bought it out has no explanation as to how they funded this, how they got to what they are, and all of those things. Even at a market cap of $50 million, how are you affording this deal? We don't have details. We're still trying to figure it out. But he's supposedly richer and well off, and we're supposedly not going to ask any further questions.
Okay.
There we go. Another week of Make It Make Sense. We haven't made sense. We're going to keep it moving because we'll see one day we'll get it right. That's the show for today, folks. Before we go, we simply cannot leave you without an unfiltered opinion. This week's unfiltered opinion. Si, you've seen the video, or you've seen the photos of, well, I don't know. In this day and age with AI, everything is possible. But nevertheless, we're going to take the photo at face value as it is. There's a photo circulating around, folks, of President Trump holding hands with one Nicki Minaj. This is post the photo that was put up by Nicki on her X page holding a Trump gold card.
And her making out with the Kirk lady.
Erica. Oh.
Making out strong language, but...
Okay, so
she has a new album out in like May, and I've been looking forward to this new album for like ages, and now I'm going to have to...
Now there's a conflict of interest.
No, there is no conflict of interest. I can't take that Nicki Minaj album, and I'm going to copy it onto tape.
Okay.
So that I can play it on tape, and so she gets no money. Problem solved.
Deny
Next.
you royalties.
Yes.
We're going back to piracy.
I am not streaming. I am not buying. No.
But you bought the vinyl. You'll get something from the vinyl purchase itself.
No. I'm going to go at nighttime when there's no one there and sneak in and
Or just borrow the vinyl. So buy the
Borrow
vinyl.
it.
Buy the vinyl, write it onto a tape, and then return it and say you've
vinyl
changed
man.
your
I
mind.
need to borrow the vinyl.
Investing isn't hard. Just try it.
Okay, now I need to.
Disclaimer. The views expressed by the host of Insider Exchange do not necessarily represent those of our clients, sponsors, partners, or guests and should not be considered investment advice in any way. Similarly, the views and opinions of our guests and clients do not necessarily reflect those of our hosts or on our platform. Nothing shared on this platform should be read as constituting investment advice of any kind on the part of Insider Exchange. Any of its hosts, guests, partners, or sponsors trading and investing carry varying levels of risk and may not be suitable for all investors. Please ensure you fully understand the risk and take appropriate care to manage your risk. We strongly advise that you obtain independent financial, legal, and tax advice from regulated professionals and institutions before proceeding with investing decisions. Can I go and play now?